Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market. So yesterday looked at Apple's 9 all-time highs in a row and said it's time for some daily consolidation, or at least time to be watching for it. We got it today, and if you had ever any doubt that this market is rigged, if you're paying attention today, it is very crystal clear. I certainly did not need the proof, but today was such a clear day for me because I'm sitting here watching the technical levels and I'm watching these headlines come out as these technical levels are being hit. And what I mean by that is we started today with a weaker open. The bulls bought the dip and they held on just fine. And we saw the bulls playing defense yet again all morning. And here was the open, 311. We started the morning and we said, okay, 311 is the level we've been watching pretty much 3 days in a row on my morning live streams. I say, if the bulls hold 311, they keep full short-term control. So we held it first thing this morning. We bounced back to the high of the day. We slowly faded. And then as soon as we touched 311, a headline comes out. And the headline is putting doubt into the China-Trump deal. And we drop $2 in 25 minutes. From there, we bounce around and we see a tightening range and a bit of an equilibrium. And with a high of the bounce initially was 309.72. We saw this pullback. I entered a little bit of a bullish position based off of the low. I would have stopped out if the low broke. We got a little bit of follow through. Right when we got to here, I was saying 309.72 is the key short-term level. Needed to break for any bounce follow through. We got right to it. We broke it by a couple pennies, and then instantly we get another headline coming out. And it pretty much completely contradicts what the previous headline said. So we get a spike up through the high of the bounce to that point, and we get a run almost back to where we came from, 311. And here we are at the end of the day hitting 310.96, 310.92. So essentially a $2 dump with a headline leading to a technical break and stop levels triggering, and then a short-term resistance level breaking on a headline in the opposite direction and follow through the $2 back. So I have no doubt that there are high-frequency traders and bots and algos that are using these headlines at key technical levels to their will. That's not what I meant to say, but you get what I'm saying. So we have a daily high or low, and anything above 307.66 keeps the daily uptrend in favor of the bulls, and we have a nice long lower wick. If the bears are going to prove anything to us, we have to set a lower high compared to 311.85. This wick is not accurate. We did not see a move up that high. We got back to 311. So we've got our high, low, currently a lower high. Depending on where we open tomorrow, the bulls will have to hold the low of today and break 311 to change the hourly trend back in their favor. Or if we reject from 311 and we head back down to 309.06 and break it, we're still in the hourly downtrend and we still have not found our daily high or low. Hourly oversold bounces, there's general, and I picked this up from the cryptocurrency space, but it definitely applies to stocks. When you're in a significant bull move, the first 5-minute RSI getting oversold is usually good for a day trade. The first hourly RSI getting oversold is usually good for a bounce as well. So the hourly RSI got oversold down at the low of these candlesticks. That RSI was poking below 30, and then we get the $2 bounce, thanks with a little help from a headline. IWM. So IWM low of consolidation, 157.19 held by 7 cents. So that's a double bottom at this point. But the bulls are lacking the follow through needed to confirm this weekly bull flag at this point. We need an hourly trend change, just like SPY, to try and convince the bulls that that double bottom can hold. If it does, then we're still in this tightening range that is still healthy weekly consolidation if that level can hold. QQQ, daily consolidation, anything above 222 cents is a daily high or low. We held that level today. Hourly time frame, again, there's that upper wick, but we can just zoom in to see where we actually topped out. End of the day, 202.17. So we're watching to see an hourly lower high compared or actually what we need to see is a higher low compared to the low of today and a break of 202.17 if we open a bit lower tomorrow to change the hourly trend and give us our daily higher low. XLF failed to break 303, 30.03, and here we are down testing support of 29.45 and holding it. So we have a bit of an equilibrium. I'm looking at the high of the bull move, the low of consolidation, a lower high with the inability to break resistance, and a higher low with the inability of the bears to break support. So a tightening sideways range. As I said to start this week, XLF and IWM have to see continuation and break their recent highs for the market to see another leg up. That's the juice where it has to come from, and so far those bulls have been unable to see that continuation move. XLV, healthy, little triple top, up at 98, just under it, but we're just looking for a daily higher low to form, and it's a potential daily bull flag at this point right now. XBI, still all bulls. Last daily higher low was down at 83.02. That was over 5% ago. If we lose the hourly uptrend, we are looking for daily consolidation, and you could say that we had a bear break with the break of the low of today. We got the low, high of the bounce, bear break under the low, and anything under 88.03 is an hourly lower high, and we'd have to see this hourly downtrend confirmed for daily consolidation to be underway. You can see the headlines keep coming in. Trump's looking to see whether Apple should be exempt from China tariffs, and actually that Apple trade, I'll share my heartbreak today. And it was just a mistake on my end because we knew we were looking Apple short. So I entered Apple short. Nice solid position, nice solid entry at 268.50. Nope, 265.33 on the way down. So I saw some weakness. I saw that Apple was weaker than SPY and QQQ. I made a bearish entry after this new low of the day and said, okay, small risk. I will stop out if we hit a new high of the day. I will be risking 80 cents or so. And we ended up dropping down, little 5-minute bear flag, lower low. I said, great, I'm comfortable. I was very distracted trading the marijuana sector bounce. It's been a great 2 days, and I was focused there. So I had my stop loss above the high of the day, and then after that new low of the day, I moved my stop to break even, and I didn't look at the charts and make sure I was putting it in a good spot because we always want our stop loss either based on support or resistance. Because I'm short, I want my stop loss above resistance. I put it at break even. I was literally probably the last order to trigger before we rolled over and then saw beautiful follow through. So that's me getting stopped out, break even. If I was doing it correctly, my stop would have been above our 5-minute lower high of 265.33. 265.53, 20 cents higher. So that 20 cents cost me, I probably wouldn't have nailed the bottom, but I would have had an opportunity of $4.95. Even if I nail 2 of those dollars, that's my day maker. So I missed it. Fortunately, it was easy to get over because it's been a month maker or so the last couple of days on the Canadian MJ bounce, but definitely stung. And just a little reminder, again, I always love when my lessons are either from small profit and money left on the table or break-even trades. So I get a free lesson, check the chart, you idiot, use the 5-minute resistance. Nothing new there. VIX. So we got the big spike, but gave it all back as bulls bought the dip. 1260 has to hold tomorrow for a higher low. So low, high, 1260 has to hold. If it does, we'll look for a lower high to form. And the bulls are itching for it, but the S&P 500 bulls are not ready to roll over yet. Gold has its daily trend change with follow through over 1475, but it's still not very convincing. And we saw a bit of a bull move up in response to the market weakness. The 4-hour time frame held a nice support, so there was a play on bull miners based off of gold holding this support and SPY breaking 311. Support was 1464. We bounced off of 1465s. And we have to be cautious of the head and shoulders pattern here with the left shoulder, head. And if we roll over and break 1464 and 65, we lose the 4-hour uptrend, and that will increase the odds of a weekly bear flag. That is still possible unless we see a clear follow-through move up into the 1480s. Silver is the same thing. It's holding on. I like the 12-hour time frame a bit better for clarity. We have a 12-hour uptrend intact. Still following through on the bounce, but we need a good bit more to not be a weekly bear flag. Look at this. Bull miners. So we did break that low of yesterday, and then we had a bounce right after it. And that's unfortunate because I just missed this move on bull miners. I was bottom fishing the low of the day here, watching this 5-minute falling wedge. I saw SPY was approaching 311, but SPY held 311 during this bear break, and we flushed, took out all the stops, and then a rocket ship bounce thanks to the S&P 500 quick collapse. So a very quick 4% bounce, but I exited on a tiny loss trying to bottom fish the low of the day, and just maybe 20, 30 minutes too soon on those bull miners. Oil, bull reaction to the inventory report. Bears are going to be looking to top fish 5804 resistance. We will need a 4-hour higher low and higher high if the bulls are going to have a chance to try and break 5804 resistance, in my opinion. Nice recovery after the bear 2 days, but until we change that 4-hour trend, we're just going to be looking for a daily lower high at this point. And natural gas trying to get a little bounce going. Its inventory report is tomorrow. Anything under 266 is just a lower high. And we're either going to see a bullish reaction and head up towards 266, or a bearish reaction, which means our daily lower high has been established, and we look back down at our recent low of 2468. So a little bit of rattling around by the bears, but no follow through. We will have to see 311 reject, which it already has done here at the end of the day. Now the bears have to follow through and break the lows of today, tomorrow. And what stood out this morning is, before the headline came out, we had the tech sector start weak. I don't want to get this backwards. Tech sector started strong. So the tech sector started strong, and the financial sector pulled back. And then as soon as the tech sector started pulling back, the financial sector was a good bit above its low of the day. So they were doing their tag team thing. They were both not going down at the same time. When they started to, it was the algos reacting to the headline. That's when the bears get followed through, when both sectors are going down, hitting new lows at the same time. And if that is not happening, the bulls keep control. So I appreciate you watching. Hope you are well. We'll check back in tomorrow. And we'll see if the bulls just form daily higher lows to keep the trend in their favor. Keep an eye on those headlines. Can't stress enough having a team of traders. This is a team game. And when you got a team of 1,000 people all posting the headlines as they come out, posting the news that they come across, the setups that they're watching, it certainly helps out. See you tomorrow.